Welcome back to the Williams Real Estate Channel. Today, we are discussing how I believe Australia is heading for the biggest recession in recorded history. You heard it. Stay tuned. And you may be thinking, why is this buyer's agent talking down Australia? I'm a realist. I'm a professional investor, property investor, also invest in stocks, the ASX, shares, gold, silver. So I'm a realist. I don't put my head in the sand and believe it's all going to be hunky-dory and rosy, because ultimately, when you're an investor, you're managing money, you're moving money around, and you're putting your money to work to get a return. Obviously have the buyer's agent business, and I help people buy investment grade properties to help them build sustainable long-term wealth and sustainable long-term property portfolios off the back of my experience working in the construction and property industry and my own experience building my own portfolio. I help people today buying the same properties I'm buying personally today. But today we're talking about how I believe we are heading for the biggest land-driven downturn in history. This one is going to make the GFC and the 91 recession we had to have look like nothing. It's going to be the likes of the 1990s or 2008 on steroids, and it will be ingrained in especially young people. So millennials, everyone under the age of, say, 40, this will be the downturn that we'll tell our children and grandchildren about, just like what the baby boomers experienced in the early 90s. So we'll run through how I believe it's coming and how to prepare, because ultimately we'll talk about how to prepare, how to get on the right side, to be prepared for when the market turns, but then also be prepared to capitalize and actually prosper during the years ahead, because there's going to be extraordinary amount of opportunity and it's going to be very turbulent times ahead, and you just don't want to be getting taken out in the wash when the market turns. So how I see it all panning out is, firstly, we are currently being run by a far left Labor socialist government, probably the furthest left government on record. And I mean, I'm not here to get political. As I said, I'm a realist. I'm a property investor, professional investor. This is the reality of the situation. We are run by these gentlemen, and to set the stage, did a bit of research on all these folks. Anthony Albanese, the Prime Minister. Before we get into individuals, across the board, they've all been working in government roles their whole career. So Anthony Albanese is the Prime Minister. He's like the CEO of a major company like, say, BHP. But Australia is practically a company. It can be looked at as running a company. And Anthony Albanese is like the CEO. Jim Chambers, he's the treasurer. He's like the CFO, the chief financial officer of a big corporation. And Chris Bowen, the Minister for Climate Change and Energy, would be like the likes of a general manager in a large corporation. So these three gents have all got careers only working for government. So they've never worked in the private sector, other than Anthony Albanese, who started his career, worked in 1980 and 1981 as an administrator for a bank while he was at university, and then when he left university, he then started working for the government. So they've all pretty much never had any experience working in the private sector, working for a business. They've only ever worked for government. So you can imagine the way a company would run if you plucked out these folks and got them to run, say, BHP, Rio Tinto, Commonwealth Bank. You can imagine how those companies would run having folks like these who have never actually got any experience working their way up through the ranks of a private organisation. They've always worked for government. That's a problem. That's a big problem to start with, and it's reflected in their policies. So we'll start with Anthony Albanese, our Prime Minister. He sets the stage of what he looks to govern for the country. We'll talk about each of their current agendas that they're running and the implications of it for the market and where the market, I believe, is heading in the future years ahead. So firstly, Anthony's running a high migration rate, the highest migration rate on record, and close to probably the highest in the world, nearly 3% growth. So massive growth. Over 500,000 net migration per year over his term. And it doesn't look to be slowing down. Now that he's come in again, second term, this is his final hurrah. He is going to lean into harder and harder his agenda because this is it for him. So he's running massive migration. And you may think, why is he doing this? So migration would be to continue to prop up the GDP, gross domestic product. The growth is forcing growth, because if he backs off the migration, we would be falling into a recession. So it's almost a political play of why. Further to that, lots of these migrants would be voting for a Labor government. So he's even importing votes, just like what we saw over in the US when the Democrats had open borders for many years and Joe Biden was importing all these migrants. He was essentially importing votes to stay in power. So that would be the main two reasons for running this such high migration, is to keep propping the economy up, forcing demand, and also importing new voters so he can remain, or his party can remain, in power. Because you can see, and obviously you could feel the impacts of high migration, the stress on infrastructure. So schools, childcare centres. I mean, I've got two kids. They've been on wait lists to get into childcares, wait lists to get on schools. You have to sign them up since birth, and there's no guarantee. So we've got them on multiple schools wait lists to get into, and they haven't been accepted yet because there's just massive demand. So there needs to be more schools built, more infrastructure built. So childcare, hospitals. If you've ever been to a hospital, especially the public sector, there's now the likes of one doctor to every 50 to 100 patients. So there's not enough doctors, nurses in the industry to support growth because we're growing at such a strong rate in terms of population. Transport infrastructure. So if you ever tried getting on a bus and going into town, when I was working in the city in Sydney CBD, between 8 o'clock to 9 o'clock, it was virtually impossible to get on a bus. The buses were chockers full, and they will just continue to drive through the likes of Drummoyne, Balmain, all the way through into the city because they would fill up. The infrastructure is straining. Housing, this supposed housing crisis is a demand issue. There's too many migrants coming in, soaking up all the rental stock, housing stock. They've got bans on people from buying houses for 2 years, so that pushes more demand into the rental market, soaks up all stock. That is why we are in this supposed housing crisis. The root cause of this issue is migration. It's great for property investors. It will continue to keep pushing up rents, and those rents will continue to keep getting capitalized into higher prices. But ultimately, it strains the society. It creates a divide between people that can't get into the market versus people who are in the market and are invested into the market will do well and prosper. Ultimately, importing a lot of migration is good for property investors. It's good for people who own assets. It will continue to keep forcing demand, but ultimately it'll break down society, because not only is it forcing so much strain on the infrastructure, and construction and property can't keep up with that demand. It never will. It's a slow moving beast of building new homes, building new schools, building new hospitals, building new infrastructure. It can never keep up with this demand that we're growing. So we're expansion of construction and property industry, which is why I believe it's one of the best industries in Australia. You always have demand. There's always massive demand for construction and property development. It is all been driven by this high migration rate. So that's causing issues, obviously. Everyone can feel that. When we also now look to big government, Anthony's running, and they had more than double the employees that was required compared to the likes of how a private organisation is run. Hence, people are unproductive. It was pretty much a 2 days worth of work spread out across 5 days. So you can imagine people not being as productive. That then has knock-on effect to the private industry as it sets a benchmark for the private sector. So like working from home, or 4-day working weeks, or 38-hour max a week working. That sets a benchmark for the private sector, which then creates it hard for businesses to operate, because if you have government setting a new standard of working, that will then filter through to businesses. Businesses then get put under strain and can't attract the workers to work in the private sector because they can get an easy, fluffy, cruisy government job. So that's creating obviously issues with the productivity. 50% of people now are dependent on government by way of a job or government handouts. A lot of the workforce now dependent on government, which is moving towards this socialism type of structure. Hence, this is Anthony Albanese's agenda he's running. So that ultimately is unsustainable. So this does put pressure on businesses, and businesses can't keep up with that, and ultimately are losing workers to likes of government jobs. The minimum wage too. So Anthony Albanese is a pro-union supporter. He supports minimum wage. We've got the highest minimum wage by purchasing power in the world, meaning it's basically in relative terms to what our dollar is worth, to what it can buy in our country. We've got the highest minimum wage in the world. So what this does is it pushes up prices for labor. Ultimately, that gets handed on to the end product or service of a business. It's okay for government because they can just keep printing money and going into debt to fork the bill. But for a private company, they don't have the luxury of just printing money and creating money out of thin air. They have to pass on that cost. And if they can't pass on the cost and they lose demand for goods and services, they go broke. So Ultimately, we saw that in the likes of Holden and Ford. They became uncompetitive in Australia because of the high rates. They can't manufacture with the high labor rates, and they went broke. And then now we lost that great companies, those great companies, to the likes of overseas in Asia, where they are now being manufactured. So sure, you can push up minimum wage, but then that ultimately will kill businesses, and then businesses will go broke, and then there'll be higher unemployment. And the reason why he's creating all these jobs in government is to prop up and give people jobs, and that's why we're seeing still quite low unemployment, is because he's creating government jobs, allowing big government to create. If he didn't have big government, unemployment would be through the roof. So we're almost walking through zombie land, where demand is being driven by migration and jobs are being created by government to make it look artificially good on paper, but it is unsustainable in the long term. Ultimately, it'll all come crumbling down in time. So that is Anthony Albanese, his agenda. We'll now move on to Jim Chambers. So he's never worked for a private company, and he's practically the CFO of Australia, the Chief Financial Officer. So can you imagine even Jim Chambers being the CFO for CBA Bank or BHP or Rio Tinto? He wouldn't cut the mustard. There's no way. And he is essentially in that same role in a bigger organization, being the federal government. So it's crazy. It's absolutely crazy to see this all happening in slow motion. And let's get on to Jim Chambers' agenda. So he is also obviously left-leaning socialist views, with the looks to distribute wealth from wealthy people and hand it out to unwealthy people. So basically robbing Peter to pay Paul by way of unrealized capital gains tax, starting with super, but we'll see where it goes. Basically, if you make a capital gain, so if you got 3 million bucks in super and you have 10% growth, that's 300,000. Or if you have a property or a farm in your super and that has 10% growth, say over 12 months, so say 300,000 gain, you will get taxed on that capital gain without even realizing it, meaning you don't even sell it. So you got a paper profit if you've got more than 3 mil. And if you have a gain, then you have to pay a tax to the government for that paper profit. This is, I mean, I guess laughable. I would like to understand of what happens when we go through the next downturn and there's negative capital gain. Will the government be repaying a credit when people's supers get cut in half, lose 50%, or properties start going down in value year on year? Does that mean the federal government will provide credits? Who knows? See where this lands. But I mean, this is classic robbing Peter to pay Paul, and it's again unsustainable. Looking to abolish negative gearing, looking to abolish CGT discount on capital gain. So abolish negative gearing. I mean, negative gearing is not an investment strategy. I don't support it anyway. I'm all for positive gearing. You have to have your properties cash flow positive to allow the banks to keep lending you more money so you can keep growing and building your wealth. If you go down negative gearing route, sure, you can save a bit of tax or reduce your tax liability. You still have to fork out that bill of the shortfall, and the banks will lock you up. It's just like running a business. If you took out $1 million loan to start a business and you made a 50 grand loss, sure, you can save some tax, but the banks won't lend you any more money until you become profitable. So that's one of the main reasons why most people get stuck at one or two properties, is because they go down the negative gearing route and leverage themselves into a very cash flow negative property. So personally, I don't believe in it. I don't buy into it. It's more of an incentive government puts in place for the mums and dads to go and buy new and off the plan types of properties so they can negative gear it to create more housing stock. So if they took it away, it would only disincentivize those type of investors, the mum and dad investors looking to save on negative gearing. It will reduce housing stock. If housing stock is reduced with Anthony Albanese's booming migration, that's demand, less supply, prices will go up. So we'll see where that goes. Either way, that doesn't really worry me. It'll only push up prices. Abolishing capital gain discounts. So if you buy a property in your personal name or in a trust structure and you hold it for more than 12 months, you get a discount of 50%. So if it goes up in value, that capital gain, you only get taxed on half of that. That's the capital gain discount. They're looking to abolish that, meaning you get taxed on the full gain. So higher taxes. This would mean that houses would transact less. There would be less transactions, less sales of property, less buying transactions. Therefore, again, less supply of stock, being houses selling on the market, because people would hold on to them. They'll just refinance them and get their money back out rather than selling them. If there's less stock, again, less supply, higher demand, prices will go up. Next is spare room tax. I mean, this is another one, crazy socialist type of uh, policy that they're talking about bringing in. If you've got spare rooms in your home, that Jim Chambers now thinks it's a good idea to start taxing people or bringing in a levy for not using those spare rooms. I mean, good luck with this. This is going to be the ultimate crumble, I think. Happening for Labor is all these high taxes, taxing on the family home. So buying the PPOR may now, again, now not look like a good investment. Personally, I don't have a family home. I rent vest. I rent where I live and invest across multiple markets. It is by far a more powerful strategy. You'll be able to live in more desirable areas, closer to school networks, in a property which you probably could never afford. As an example, the place that we're living in now in Sydney is worth about 5 million. I would rather rent it for $1,200 a week than fork out 4 or 5 times that in cost of interest, maintenance, upkeep, insurance, rates. That's all non-tax deductible. The only benefit currently today would be having no capital gain or no tax on the family home. However, they're bringing it in. So really, why would you ever really live in a family home other than, making, having that emotional connection to a property? But property is by far, in terms of how I look at it, it's not emotional. It's a numbers game. So another reason why owning your family home may not be even beneficial these days. So taxing the family home, EV cars, taxing EV cars. So this is pretty much just a wealth tax, taxing unrealized capital gains, taxing EV cars, taxing the family home, ultimately to raise money to fund their big spending agenda. And they keep spending more than their revenues, as the forecast for the budget is in deficit over the next 4 to 6, 10 years. So that's Jim Chambers running a pretty lousy ship in terms of when it comes to the finances of the country. Now, lucky last, Chris Bowen. I mean, this guy is, where do I start? So Chris Bowen, he's the Minister for Climate Change and Energy. Again, a career politician, never worked a day in his life in the private sector, but seems to have all the ideas of how to run a country when it comes to energy. So energy goes into everything. Energy goes into, obviously, putting your lights on in your home, heating your house, running a business. So if you have a restaurant and you're cooking and you've got energy with your lights, manufacturing, so blue scope steel as an example, melting down steel to create products, that all draws on energy. Mining, everything is driven by energy power. We've got Albanese driving growth, massive growth. We need to keep building and manufacturing to grow. And then we've got energy demand growing. The demand for energy will continue to grow in our lifetime, all the listeners' lifetime, for many years ahead. We are like the future America. We're only at the start of the growth projection of where we'll go in the future years ahead. Eventually, Australia will be a leading power of the world, probably in 100 years' time. So we're getting all this demand from migration. We need to keep building and construction and property development to keep building new roads and infrastructure and housing development. That's all going to keep driving high demand on energy. We're also transforming into this AI world where everything is becoming more digital. That's also driving demand. Electricity for cars. So we're now moving away from petrol and diesel fuel vehicles. That's also putting higher demand on energy on the grid. And currently now, 64% of energy that is created in Australia comes from fossil fuels. So 45% comes from coal, 17% comes from gas, 2% comes from oil. This is according to energy.gov.au. Check it out. 36% comes from renewables. So solar, 18%, wind, 12%, hydro, 5%. So 64% is now fossil fuels, 36% is renewables, and this bloke wants it to all go to renewables. So all solar, wind farms, hydro. The reality is the demand that of energy from the population growth will never be supported by 100% renewables. Renewables are more expensive. I mean, if you look at your power bills, if you look at your gas bills over the recent years, as they continue to reduce fossil fuels, they're not letting any more coal-fired power plants being built, and they're looking to phase them all out. They've been trying to phase out coal-fired power plants in New South Wales for the last couple of years, but they keep delaying it until August 2027 to manage energy supplies in the system, as well as coal-fired power plants in Victoria. They've postponed until plan to close them down in 2028. So they're trying to transition into renewables, and they're not allowing any further approvals to build new coal-fired power plants. But the demand for energy keeps growing. So you can see where this is going, right? The demand for energy keeps growing. They can't shut it off. They keep delaying shutting off coal power plants, and they're becoming old and less efficient. So we need to actually build new ones. And they're trying to transition into renewable energy, just solar, wind, and hydro. But solar, wind, and hydro, it's not always sunny, it's not always windy, and hydro is only 5%. So the demand for energy keeps growing with the booming population, and the supply for that energy will never be able to be provided by only renewable. If you look into it, if you run the numbers, you'll see that it will never get to a tipping point that we could be sustainable because we're growing. Maybe if we cut off migration and we just stop migrants, but Anthony Albanese won't do that because we'll dip into a recession. They're trying to push towards just renewable, but ultimately, just like Margaret Thatcher, a UK politician, has famously said, You don't see through the climate green policies until the lights start going out and we enter a severe downturn." So you can see where this is heading. If they're not going to keep building any more coal-fired power plants and pushing more and more into renewables, they're using the funds from coal mining and iron ore mining to fund a lot of the renewable projects, as well as taxpayers' dollars. So it costs more, it's less reliable. Even when there's high demand and less supply of energy, prices go up. So that's why you can see your energy bills going up. Businesses are struggling. Businesses end up going broke because of the high cost of energy. BlueScope Steel says it costs 3 times more in Australia for energy than in the US. So we'll see more and more manufacturing leave Australia, and we'll become pretty much solely a service-based country where we won't have manufacturing, because manufacturing relies on cheap, reliable energy. It can't rely solely on renewables. So that's another reason why manufacturing will continue to dry up. That will ultimately reduce jobs, and then eventually this will all come to a grinding halt in the years ahead. I overlay this with the 18-year land cycle of where we are, and as you can gather, those three agendas being high migration, big government, net zero, renewables, and taxing, their tax policies of robbing Peter to pay Paul, is all unsustainable, and it'll all come crumbling down and crashing down in the next land-driven downturn. We're due 2 years away. Come 2028, you'll know about it. It is going to be like the 2008 or 1991 on steroids. Every second one is a big one. So the next one is going to be like the 1990s, early 90s, the recession we had to have. Paul Keating. Paul Keating was a Labor treasurer, was actually Jim Chambers, one of his idols. History is repeating like clockwork. So we are on the eve for, I believe, the biggest downturn in Australian recorded history. There's more debt in the system. There's more leverage. They are running this agenda of mass migration, big government spending. We've got low productivity. They are restricting energy supply, pushing up prices, sending businesses broke, raising taxes. Ultimately, it's all going to come crashing down in the years ahead. So what do you do? What do you do about it? Well, right now, we are not suggesting buying any property in these markets, as they are away at the races, but they will get the brunt of the downturn in the future years ahead. Classic euphoria is going into those markets such as Brisbane over the Olympic Games, but that is a classic market signal of when a market is reaching a top, when it becomes well mainstream, there's fear of missing out, and there's FOMO. Everyone thinks the party is going to go on forever. The party never does. Eventually, the lights will go out, the music will stop, and the markets will turn. And this time around, China is not as strong like they were pre-GFC. They got a lot of pressure out of the US. Their property and construction industry is not as booming as it was pre-GFC. This time around, they're not going to be there to save us. And Australia is not going to sail through the next downturn like we sailed through the GFC. The next one is going to be a big one. So what's this going to happen? It's going to mainly impact these markets. There's always a demand to buy property. We'll always have a big growing population. They'll keep forcing demand through migrants. People need to live somewhere. Everyone will need a roof above their head. People will be bunkering down. The demand will shift back to Sydney, Melbourne. It's already starting, but it'll start to charge in the years ahead, and it'll all feed in from the bottom end. The bottom end will be rising. Government's already coming in and putting policies like 5% deposit, no LMI for every first home buyer. It used to be only capped at a certain amount. Now it's the whole board. Everyone doesn't, it's not even income tested. So that's demand. That demand feeds in the bottom. The RBA will drop interest rates down to near zero again. They'll print money. They'll provide lots more government handouts like what we saw through the COVID recession. The JobKeeper, job seeker payments, they'll all be back on steroids. They'll be printing money, handing money out left, right, and centre. That all that credit will be soaked up in higher property prices in the affordable stock, and the entry level stock will be rising in the likes of Sydney, Melbourne in the years ahead. This is where we're selling our seeds today to not only protect ourselves, but to be prepared and prosper in the years ahead when the market turns. Follow the demand, be ahead of the curve, and you'll do very well. Now is not the time to be overextending yourself and getting into the likes of commercial property, new and off the plan property, big shiny homes. The top end will get hammered in the future years ahead, especially in the likes of Brisbane, Perth, Adelaide, Darwin, South Australia, WA, Queensland. Historically, if you look at the historical sales data trends, the same boom happened from 2000 to 2007. Come 2007, 2008, those markets got hammered. The demand shift back to Sydney and Melbourne. Sydney and Melbourne were away at the races from 2008 and onwards in the recovery in the first quarter of the current cycle up to around 2017. So we're selling our seeds now in these markets for the future years ahead. If you want help capitalizing on this type of information, getting deals pre and off market, building your wealth through these turbulent times ahead, hit us up, send us an email. We can jump on a call, do a strategy session. We can find you some deals to help you build your portfolio and keep growing and building your wealth. As all this discussed today probably will never change, but you have to move and shake and do the best you can for yourself and your family. And the best way I find is by investing in the blue collar, working class, affordable housing stock. It will always be in demand and there's never enough supply. As always, this is by no means financial advice or general advice. Talk to a professional financial planner and the experts before making any financial decision. This is just my trains of thoughts, my story. Until next time, thanks for watching.